My name is Ludek I'm from Deloitte Central Europe, and I will talk about Euro adoption in new EU member states. For the time being, just 4 out of 12 countries that joined the EU after 2004 are members of the Eurozone. They are Cyprus, Malta, Slovakia and Slovenia. Years ago, it was clear that most likely countries that will join early Eurozone are the Baltic states. These were countries that were growing very fast, were responsible macroeconomic policies, and they opted for the fixed exchange rate. Surprisingly, none of these countries has made it, and only Lithuania has applied for Eurozone membership in 2006, and this application was rejected based on just a very small margin of inflation exceeding the criteria. For the countries in the Central Europe, the countries that are using floating exchange rate, the Eurozone entry is more difficult, especially because their fiscal policies are not in line with the Maastricht Treaty. Why there are just 4 out of 12 countries members of Eurozone for the time being, when countries are required actually to make steps that will allow them to adopt the euro? Probable answer is the fading support of these steps both on the side of political elites and citizens as well. It seemed that the Eurozone entry is not the priority and politicians were focusing on domestic political agenda. Unfortunately, last year, when the financial and economic crisis has started, it was clear that this calculation was not correct. Financial and economic crisis has hit the region quite badly. The first affected were the countries with the fixed exchange rate, especially Baltic states. Increase of risk premium, disappearing liquidity of the market and concerns about financial sector has created very difficult economic situation, and the countries will experience a very big decline of the economic growth. Floaters, especially the countries in Central Europe, seems to be better off at the beginning. Financial market was functioning quite reasonably, but later it was clear that economy will be affected. Recession is coming to those countries, and the financial market has disappeared, has lost the liquidity, and it was more difficult to provide the loans. For the time being, it's clear that for most of the countries, euro adoption is more pressing issue, and one of the lessons that they learned is that it was underestimated how important for small open economies in the Central Europe is to adopt the euro. What we can expect now? Most likely Baltic states will just wait for the moment they fulfill the criteria, they will apply for Eurozone entry, and I believe they will be adopted. More difficult situation will be in countries with floating exchange rate. For them, especially fiscal policy is a substantial obstacle, and maybe even inflation will not be very easy to fulfill. Nevertheless, I assume that Poland is for the time being positioned best to adopt the euro even as soon as 2013, and if other countries will set it as a clear priority, they can be pretty close to this date as well.